and welcome to the Morningstar series Ask the Expert. I'm Emma Wall and I'm joined today by Kenneth Lamont, passive fund analyst for Morningstar. Hi Kenneth.
Hello Emma.
So we're here today to talk about the latest strategic beta report from the passive fund analyst team. What are the biggest findings this year?
Well, the biggest findings, we sort of building on the research last year, we've found sort of more of the same. We found that the European strategic beta ETP market has been growing, continued to grow aggressively throughout the year. We've seen the number of funds expand by a third since last year, and the sort of the AUM growth over the last 5 years has now reached sort of 4 times. There's been a 4-fold increase.
And the US still has the majority of this market, which is unsurprising because the US is the most mature passive fund market. But the European strategic beta sector is growing, isn't it?
Certainly, yes. It's growing faster than the wider ETP market. Every year we're seeing it take more and more market share. It's just it's one of the fastest growing sort of new products on the market, if you like.
And within that, obviously, it's a sort of one-way trajectory. People are becoming much more interested in these products. What is the appeal? Why are people becoming interested in these products?
Well, it's very, very simple. These products offer traditionally active strategies for a significantly lower fee than active managers. And just to explain, these products systematically track an index, but the index is generally not cap weighted. So you're making an active bet against the market, but you're doing so in a rules-based manner.
And what are the most popular of these strategies?
By far at the moment in Europe and actually globally, dividend ETFs or ETPs, strategic. So these funds are weighted or selected on their ability to produce dividends, strong dividends through time.
And no surprise there, because interest rates across the developed world have been so low for so long. What about new entrants to the market?
Well, as we see the main core exposures in the market, more and more providers enter the market. We're seeing a sort of crowding out effect, and we've seen the fees for these products, as you might expect, creep lower and lower, which is great for the consumer.
And they're already a low starting point, so if even cheaper, active-like strategies is fantastic.
It's great for the consumer, and in response, we've seen providers sort of expand the breadth of products on offer. So currently this year we saw the first buyback strategies and the first low beta strategies enter the European market. So this is broadening the opportunity set for investors.
And predominantly they are equity strategic beta ETFs, ETPs, aren't they? What do you expect to see in the future? Will there be sort of greater diversity of asset classes?
Well, we expect to see all of these trends continue. If you look at the US, we can see that, which is a sort of more mature market, it has a far larger market share. So if we use that as a barometer, we can see there's a huge amount of scope for growth in Europe. They are increasingly sort of popular. But in terms of the trends, we expect them all to continue. So we expect the prices of the core offerings to continue to fall in the medium term, and in response to this, we expect the breadth of offerings to increase and the complexity of offerings. And as you said, the sort of final point is that up until now, or this point, most of developments have been focused on the equity markets, and I think looking forward we can really expect more, specifically in the fixed income markets. We can expect a lot of movement there over the next couple of years.
Fantastic news for the consumer.
Absolutely.
Kenneth, thank you very much.
Thank you, Emma.
This is Emma Wall from Morningstar. Thank you for watching.